Tuesday, May 6th. We're past May the 4th. I'm going to go over HIMS, which I bought yesterday. I'm going to go over Palantir earnings. We're going to go over the S&P targets being taken down. I've got a scanner free for Trendspider subscribers to actually import. Big news, Tom Lee is bullish. Got some utility sector plays that are interesting. And for the first time in a while, I did scans this morning. And so if you're listening to on Spotify or on YouTube to the pre-taped one, the live one that you see also on YouTube, you can watch me do scans. And all that is, hey, I take Trendspider and say, okay, which stocks in which watch list that I have and which sectors that I actually scan, which ones have an entry in the 4-hour algorithm today? And then you can scan through them and see which ones are bullish. Remember, if you don't have Trendspider, go over to my link tree, linktr.ee/daily stock pick. It's the top link. And you've got the Cinco de Mayo sale going on for one more day. I think it's still $5 to try it out. You can log in and check it out. Remember, when you click on this link in Linktree, it does give you the best offer that's out there. So if you go and try and find a better offer, you may not be on my affiliate program. And so if you're not on my affiliate program, I can't give you all of the tools that I use to import. So be careful what the last thing that you click. But what you do is you just email me after you sign up for an annual plan, and I'll send you everything that I have. Now, I do want to say something. One thing that I've been watching, and I put it out there and I've shared it with everybody with Trendspider, is the Liberation Day strategy. Okay, this strategy I developed after Liberation Day. So I didn't get out here on March 3rd. I wish I had, but I wrote this and I back tested it. Okay, it makes you 302% versus 322% on QQQ for the last 9 years. Okay, 9 years. It back tests. It saved you during COVID. It saved you during 2022. You can see it right back here. It has you in during those bull runs and takes you back out during the bear runs. Now, it doesn't win 100% of the time. It wins 64% of the time. If I told you to go to Vegas and you could win 64% of the time, you would say, hallelujah, I'm going to make money. And that's what this does. Your average win is 22%. Your average loss is 5%. So you make 302%. Yes, it doesn't equal buy and hold, which is 322%. But I'm okay with that because what I'm doing is playing a long game. And so in QQQ specifically, I buy when one of my strategies tells me to buy. Typically, it's the 4-hour algorithm. Okay, but I've always had trouble trimming and knowing when to trim, because the 4-hour algorithm, when you run it against QQQ and you back test it for 24 months, it makes you 46% versus a 55% buy and hold. You win 48% of the time. I'm okay with that. But during a market where a tweak can take you down by 20%, I want to be able to know on a long-term basis when I pull it out. So let me just go over this. Okay, I was looking yesterday at some of my most recent buys. And some of my most recent buys, I am way up on. Okay, QQQ. During that day, when Trump said, hey, it's a good day to buy the market. Okay, remember that the S&P, the NASDAQ was up like 10%, 9% just in that day. I bought it at the end of the day. 6-figure position, I'm up 10% today on that one. Okay, VOO, same day. I put in a 6-figure position. I'm up 6%. Meta, I put in a large 5-figure position on that day. I'm up 6% on that one. CrowdStrike, I put in a large 5-figure position on that. That's up 20%. Wells Fargo, boring bank stock, I'm up 13% since I bought that one. Look at that 4-hour algorithm right there. The 4-hour algorithm makes you 99% over the last 24 months versus 87% buy and hold. Okay, I bought when it told me to buy. I like this. I had it on a watch list. That's how I use my tools. Okay, it's not, there is nothing inherent in me. You know, yes, I take a little more risk than some people. I am a lot less risky than a lot of other people. But yesterday, I went balls in with the boner pills. I got hooked on HIMS. I went over it yesterday, how I thought that Olga, I forget his name, but on Substack, I have it in the newsletter. So if you go over to the newsletter and you just look at yesterday's thing right here, we're going to take this down. That's nice, soft music. But if you go down to the bottom and you look at right here, HIMS revenue grew every quarter since they became public. They're likely beat this quarter because of a fire sale compounding GLP-1. They didn't include GLP-1 in their past guidance, but now they've partnered with NVO. They're likely raised the cash. Beaten shorts grades. We went over it. They have a huge short interest. Okay. And I said, here's my theory on this one. With 28% short interest, with them not putting in GLP-1s and them having GLP-1s, they will kill it. Well, I wound up buying it yesterday. I'll go into it when we go into earnings, but I did wound up buying it. I bought a 5-figure position. I'm hoping to make 20%. I like this gap up here at 49. They killed it. And they are down 7% to $38. Okay? So I have to look at my position today. If I'm down 10%, I have to make the determination. Do I just cut some and take the loss? Or do maybe I buy more? I will figure that out. Again, that's part of being an investor and a trader is you take your position and then you figure it out. But I have it journaled before I bought it. So I know when I look at it and when it opens up and what the bottom and what the top are going to be. It's very simple. Make sure you have a plan. Options might have been a better strategy for me, but I am too dumb to do options. Honest to God. I know everybody gives me a lot of credit for being smart. I am not smart. So I did buy HIMS. We'll go over a little bit more, but I want to go over the entire kind of market. First off, Schwab Trading Activity Index retreats to 2-year low. People aren't trading. People are scared. What I found interesting are the popular names by Schwab clients that they bought. Okay, NVIDIA, Amazon, Tesla, Meta, and Palantir. Those are ones that people bought. NVIDIA obviously hasn't taken off. Amazon hasn't taken off. Tesla took off after their earnings. Meta took off after their earnings. And Palantir today is down 10%. But it ran from 80 to 100. Names sold: Alibaba, Strategy. We saw that one crash. Boeing, Netflix, United Health, which has just absolutely been decimated. I thought that list was interesting. If you have any interest in these, put them on a watch list. Go and look at a chart. Go and find them out. And then you have firms. Cantor Fitzgerald issues stark warning on equities and mounting economic risks. Yeah, they were pretty we remain bearish equities and think the bounce that we thought was possible based on a number of factors is now behind us. That's what they're telling you. This is what they wrote to their clients. Cantor Fitzgerald is a big Wall Street firm. Interesting. And then yesterday we see SPY had the lowest daily volume in over a month, under 40 million shares. Only happened a handful of times. Remember the saying, sell in May and go away? That just means that the summer typically is lower volume, but that's not always a good thing, because what you want with rallies is the buyers. And if the buyers aren't there, then the sellers are just selling. So interesting stuff, interesting things to keep an eye on. Just so we're all aware, tariffs are not gone and they could absolutely upset the rally. I saw news this morning that India is saying talks are going well. This was a great article specifically on this Section 232 from the Department of Commerce section, that investigation into semiconductor imports could lead to new tariffs. This is an incredible article to read if you own NVIDIA, if you own AMD, if you own Credo, if you own any of those chip stocks, and the strengthening Taiwan dollar and Korea won. Again, this is a great article to read. It goes into absolute detail about what you need to know. It opened my mind to say, shit, do I really want a semiconductor, a big exposure to semiconductors? Maybe time to start trimming a little bit just based on this. Again, is China coming around to the table? Don't know. One thing that I did yesterday, I did this. I created a hammer candle scan. So you can go over to Scanner. You can import it. Here, I'll just do this. Log in and import. And I already subscribe to it. So I can just go over to the scanner and I can say, let's find the daily hammer. Let's just do daily hammer. Daily bullish hammer right here. Okay. And you've got NI, which is NiSource. You've got HRL, which is Hormel Foods. Is that a daily hammer candle that's going to reverse there? Tesla, have we seen a reversal from maybe coming back down? Because if you want to know what a hammer candle is, what is it? Is a bullish reversal candlestick pattern characterized by a small body near the top, a long lower wick, and little to no upper. This is technical trading, okay? It's technical. Does it absolutely work 100% of the time? No. But you can, a minute 34. It's just a way to maybe find some bullish stocks in this market. Again, if you scan using my 4-hour algorithm, if you scan using the hammer candle, there are a ton of scanners in Trendspider that you can absolutely use. And you can do it however you want. I mean, it's so super simple, and you use the 4-hour algorithm to go into it. I love it. I like this hammer candle. I like it. You can import it. Just subscribe to my newsletter for free, and you can import it if you have a Trendspider subscription. Shocking news, Tom Lee is bullish. He thinks all-time highs are possible this year because companies are proving to be resilient. Yes, they are beating lowered expectations. They are still not going to all-time highs and beating that way. Okay, I don't believe that we have all-time highs. He does, for some reason, he is just a permabull, and he will make you believe that, yes, the S&P can get up there. I don't think you can get up there. Remember how we said, and remember how it's calculated. 563. Again, if the S&P is at 5630, and you just, factor in that $260 per is the earnings per share of the S&P, times that, and if you've got a multiple over 19, then you're in a super bull market. I just don't think you get back to all-time highs. Bitcoin is above its April 2nd levels, and it's telling us that SPX should recover to the 5,800 level. That's what he's saying. Now, if that gets up to 5,800, again, SPY in pre-market is at 558. So it's still a good move. He says the oil and labor markets are telling us that inflation is tracking much lower than expected. Yes, the ECB has been cutting rates because they exclude shelter. If we did that, the Fed would be cutting right now. Absolutely. Absolutely. All of those things are facts. But the opinion is all-time highs are possible. Okay, that's a little bit of an issue. I just don't think it's going to happen. Now, Citi, they cut their price target. The firm now expects the index to close at 5,800. We just talked about it. He thinks 5,800 could be reached. Absolutely, I think. A notable downgrade from its recent forecast. They were forecasting it to be 6,500. Okay? You're not getting to 6,500 this year. Now, they do give you... Now, what I really like about this, we talked about it. I invested in Wells Fargo. They highlight tech, healthcare, financials, and other segments. They take an underweight stance on consumer discretionary, industrials, consumer staples, and materials. Citi shared insights that the firm believes in overweight position in information technology, communication services, healthcare, and financials, suggesting these areas offer strong growth potential. I tend to agree with them on the financials one. I think when you get into deregulation later this year, I think financials are the place to be. You can do XLF, or you can do Wells Fargo. You can do Citibank. You can do whatever you want. But again, financials for me, it's a good place to be. And that Wells Fargo purchase that I did, working out great. Now, the biggest movers today, Upwork, 10%. Shares surged after the company beat Q1. Now it's all about earnings. Understand that some of these companies, it's all about earnings. Upwork is one that in the quant, it's a hold. Why? Well, it's revisions. Everybody's been bringing it down. Wall Street thinks that it's worth $18. That's a 41% move from where it is right now, even with an 11% pre-market bump. Okay? Again, Upwork, probably a good one. We can go, oh, I got to open this up again. Because I went forward. Or no, Yeah, no, we're going to go back here. Biggest mover upward. Regal Rexnord. I have no idea what even that is, but they beat on earnings after mixed results. Palantir is down 9%. They blew it away. Palantir blew it away. We'll go over this with earnings, but they blew it away. But when you have a crazy run like Palantir had into these earnings, they're down 8% right now. You had this crazy run. I said it. You had a 42% gain in just 25 days on this algorithm. The average win is 25%. 42%, I would take my winnings and run. And then I'd buy back in after those earnings. You can't go in with a 42% with the actual valuation that Palantir has. People are going to take profits. And that's just what it is. The PE, 212 going forward. That is a crazy high level PE. Again, down 8, but it's one of the biggest movers of the day. Ford fell after they just yanked their guidance because they said, we can't tell what's going to happen because of tariffs. Clorox slipped after mixed results. So those are your biggest movers. Now, I've been talking about power. This article, Seeking Alpha, asks which utility stocks are most attractive right now. They go into a bunch of them. One thing that I wanted to read to you from this article, this may in fact be one of the most underappreciated trends in the utility sector right now. Most investors are buying electric utilities to profit from the data center demand, which has caused electric utilities to become fairly expensive. Natural gas ones look cheap by comparison and may be a better opportunity for investors looking for growth without having to pay for it. And that's the big thing, is you can read all about the top natural gas stocks in here. It's a good one. If you want to play that maybe electrical because the valuations are so high, maybe there's other ones that you want to look into. Now let's talk about earnings. I put the eggplant right there because we all know what the eggplant is. You all know what the eggplant is. When you get an eggplant emoji from your girlfriend, boyfriend, whatever it is, you know what it is. And that's what HIMS is. They had a killer year over year. Earnings per share, 20 cents versus estimated 12. Revenue, 586 versus 538. Sees Q2 revenue, 530 to 500 Philly versus 564 estimate. Okay. Sales, just year over year, it was great. It was a fantastic quarter. HIMS guided to $6.5 billion in 2030 with 20% margins. Look at that chart. That's their revenue. That is a crazy good stock. Again, if we go over to Seeking Alpha and we look at this, HIMS, its valuation is nuts. They're not making money. They're not a profitable company right now. Okay. Again, their PE is heavy and high. It's an expensive company. But when you look at the growth at 69%, when you look at the profitability at 79%, when you look at the momentum that they have, that's just it. Wall Street thinks that it's a $43 stock. That's 3% up from where it is today. It got there yesterday. To 43.10. Now its 52-week range is 72. The reason I bought this was that short interest at 28. I thought if they blew it away, it could go back to 70. That was the theme. That was the thesis. Now it didn't. Why didn't it? Well, when you look at this, it's the same as Palantir. April 24th, less than a week ago. The algorithm got you in at 27. I should have listened to the algorithm. I'd be up 60 freaking % today in 11 days. 11 days. I should have listened to it. I didn't. I waited until yesterday. I bought it around $41, something like that. It's at $38 right now. I will make up my mind as to what I do going forward. Is it expensive? Absolutely, it's expensive. Yes. My take on HIMS, it's overpriced. It's got crazy short interest, and yet they continue to grow. It's an aggressive stock that I want to be in for. I want to find a strategy. I haven't found a strategy. I thought yesterday's thesis was solid, put some money into it, hasn't worked out. Will it work out in the future? Will it get back to 70? I don't know. But that short pump right there might happen again. So I want to be involved with it. So that's my HIMS. That's my HIMS thing. Now, HIMS growing like NVIDIA in 2023. Yeah, and it's true. Look at that. Revenue, 111% year over year. Net income, 345% year over year. Adjusted EBITDA, 182% year over year. Operating cash flow, 322% year over year. Free cash flow, 321%. Subscribers, 38% growth year over year. Monthly online revenue per average subscriber, 53%. They are literally growing like NVIDIA. But unlike NVIDIA, you're not going to get the crazy valuation that NVIDIA got. Okay, NVIDIA was actually making money. HIMS is not. So these things are great, but they're spending a lot of money. When they become positive, that's going to pump the stock up to 50 or 60. So I'm probably okay holding this one, even if it goes down to 27. Again, I won't go poor. The key that I brought up on Spaces yesterday to this, don't risk money you don't have. If this goes to zero, it doesn't change my life. Risk versus reward. The earnings per share, 20-cent beat by 8 cents. Revenue beat by 47 million. Again, it's a good stock. And then you had the earnings call come in. They project 2030 with $6.5 billion in revenue and $1.3 billion in EBITDA projections. Again, I like this. I like that they went in with Novo Nordisk. I think that's a huge boost to this stock. And you can see the management view emphasizes the company's progress in delivering personalized healthcare experience with revenue reaching $586 million, unveiled long-term financial objective, new offerings in low testosterone and menopause support, a significant partnership with Novo Nordisk, COO with 2 decades of operation experience at Amazon joined the company. CFO reported adjusted EBITDA of $91 million. Again, it's firing on all cylinders. I like it. My only caveat to this is they aren't making money, and it is rather expensive, but I'm willing to take the chance. Again, I got sucked into these boner pills. Now, Palantir, just wow. Another crazy good quarter. Another crazy good quarter. Okay? There are 3 things that are true about Palantir. 1, the quarter looked incredible. Number 2, AIP, which is their platform, is the best app layer launch of Gen AI era so far. Absolutely. Their AI is the best out there from a software perspective. Okay? The number 3, hard to deliver positive surprise at 100 times forward sales. 100 times forward sales. So Palantir slips even as the company ups full year outlook after strong Q1. This is the valuation coming in when people start to take profit. That's all this is. Okay? My take on Palantir. It's overpriced. It's the future of AI. It's got great leadership. Again, Alex Karp, great leadership. Any pullback towards $80, let's look at the chart. Because we saw this. Any pullback towards $80 could be bought, assuming that this one gets the meme pump that it always has. And you could follow the 4-hour algorithm. Okay? We can go over here and we can look at Analyze with AI. And we can see exactly who its competitors are. IBM, Splunk, Snowflake. Snowflake, you've got that great weekly channel. I mean, if we just show you Snowflake, remember how I said, hey, Snowflake, when it's down in this weekly channel, you want to buy it because it's going to pump back up. Well, were you buying down here on April 7th when it hit a low of 120 and you're at 168 today? Again, that's 1 month ago, exactly 1 month ago. You hit 120 and you're at 168. This is a great channel to trade it. When it's down below here, you buy it. When it's above here and it gets closer to 200 and loses confirmation, you sell it. Very simple strategy. There could be a strategy like that for Palantir as well. I don't know. I haven't found it. I'm the guy who sold at 25. I like this stock. As it gets towards 80, I will start buying because I do think that's the level where it will sit. And I think the valuation of this one is crazy. Significantly stretched with metrics like EV/EBITDA at 929 compared to the sector at 22. Again, all of this is included with Seeking Alpha Premium. And you've got a crazy good spring sale. Okay, you're saving $30 off and you're getting your first alpha pick on the 15th. So if you start your free 7-day trial in the next couple of days, you can get an alpha pick with it and then cancel. So you get an alpha pick, you get try Seeking Alpha Premium. And if you don't like it within 7 days, you can just cancel it. How do you get that? You go to my link tree. It's the third link. Okay, if you want the bundle saves you even more. And what the bundle is Seeking Alpha Premium and Alpha Picks. Alpha Picks is a curated portfolio that tells you when to buy on the 1st and the 15th. They tell you which stock on the 1st and the 15th, and they tell you when to sell. We just got to sell yesterday, and I took it out. It was a loss on that one. It was a fairly quick loss from what I remember, but it was a big loss. But remember, it's a managed portfolio. So the managed portfolio has beaten the S&P over its time. And that's what you get. If you don't want alpha picks, then go for the spring sale, which saves you $30 and you get a free 7-day trial. Plus you get the next alpha pick on the 15th. And that's what it is. Again, if you want things like Palantir, you can go over here to top stocks and HRTG. HRTG is the top stock right now. Okay. It's a $593 million stock. You can see it. Over the last 1 month, you're up 50%. 1 month, you're up 50%. And we can see when it went to a strong buy in the quant. Let's see. It was 4.4 when it was trading at $14 on the 4th of April. And today, a month later, you're trading at $20. Okay, and I didn't plan. This is just me picking that out. All of these are very simple things that you can do. You can set up your scanners. You can import your portfolio. You can do all of that. In fact, they have new technical analysis, and Daniel Snyder's going to be going over this May 8th. So 2 days from now at 2 p.m. Eastern time, you can sign up for this webinar. You'll learn how to add and layer multiple technical indicators. Again, they have expanded their technical charting. The session is perfect for active traders or anyone who relies on charts to make investment decisions. Absolutely. Start using, if you sign up for Seeking Alpha, start using the charts. If you have Seeking Alpha and Trendspider, I'd stick to Trendspider. Trendspider is far more powerful than Seeking Alpha ever will be. But if you just want one tool, then get Seeking Alpha. You know, if you're just a casual kind of trader and stuff, Seeking Alpha is great. And then go and attend this webinar. It's fantastic. Now, tonight's earnings, if we go over to Earnings Hub over here, tonight's earnings includes a couple big ones. Tonight's earnings includes AMD, SMCI, which already reported, Arista Networks, Rivian, TEM, which is TEM, which is the Nancy Pelosi stock, which has been a crazy, crazy good trade. You know, if you got in when Pelosi got in, you made a nice 162% right there, and it pulled back. And did you buy it when it got back to close to where Pelosi bought it? Because that would have been great. You'd be up like 50% again. So you got that one. You do have an alpha pick, which is POWL, Powell Electric. This one has been a little bit of a disappointment of recent. I'll go and look at the chart. But you can see the earnings per share last time they reported was $2.86. They are expected to beat that this time. Okay, that's $3.44. Their expected revenue of $282 million when they reported $241. Now, that growth should come with, the increased share price in the stock, and it hasn't. We've seen it pull back. Here's a weekly on this one. Okay, the weekly chart shows you that it's down here. We've got Bollinger Bands that aren't really cinched up. They're still kind of wide. We're right on the 20-day right there. Right under the 50-day, okay? The 4-hour algorithm. You make 404% versus 391%. You win 48% of the time. Your average win is 21%, okay? And I want to show you something. The average win is 21%. If you got in here at 179, okay, and you're sitting here today, you're at 7%. So do we have more in this move? Maybe. With your average win at 21%, where would that take you? Boy, there's a nice gap up here. There's a nice gap that starts, and it's about 40% up, but the 20% might take you to the 200-day, that red line. So that's about 15% from that buy. That might be a good target at about 208. Where you're trading right now, 189. Might be a good target. Again, thesis, hypothesis. We can go over to Seeking Alpha and we can see POWL. This is still in the Alpha Picks portfolio. It's a hold from the quant. When did it go to a hold? We can see around 191, 192, but you can see up here, it hasn't been a strong buy since, let's see, it was a strong buy. I think it was a strong buy back here. Hold, strong buy. So 244, it was a strong buy, and it's trading at 191. But if you go over and you look at the 52-week range, 364 to 127. You're trading on the bottom of it. So, there's says Kingdom Capital says sell. Powell Industries, you can see all that with Analyze It with AI. We can talk about this positive. Powell Industries is attractively valued with strong multi-year backlog, rich double digits upside potential. The company's valuation is at multi-year lows. Powell's strong positive position. Concerns may face cyclical downturn with normalizing data center demand and easing power component shortages, impacting pricing power. Maybe there's some tariff issues here. I don't know. The company's ability to capture more data center capex is uncertain with fierce competition and high cash intense working capital. Powell is unlikely to deliver an alpha in 2025 due to expected tougher comparisons. Again, that is saying, hey, it grew so fast last year. It's going to be tough to keep up this year. Simple as that. Again, you pick your fighter. This is Street Fighter, man. This is back in the 80s when you walked into an arcade with your parachute pants on and your big puffy shirt and a hairspray put out, all up there. And you showed up to Street Fighter at the arcade and you said, I'm the best that can be. You better put up. And that's what Powell needs to do. So I like Powell. I do own it as part of the Alpha Picks portfolio. I don't own it separately. I'm working on a new strategy with Alpha Picks where I add to the winners and kind of cut the losers. This one would kind of be in the middle there because it has been a huge winner because it's a big, long time gainer there. Now, Arista Networks, we can look at that one. That one's, again, a tech thing. They reported 65 cents per share last time. Their estimate is 59 this time. 1.97 billion in revenue. 1.93 was what they reported last time. Nothing huge. Nothing huge. Now, does this one have any kind of, let's look at Arista Network. ANET. This one has been brought down. You can see $71 right there on April 24th. You're way up there. Is it going to get rejected at the 200-day at 96? Maybe. It's 88 right now in pre-market. If we look at a weekly chart, has this pulled back enough? Probably. But the Bollinger Bands are wide open. I usually on a weekly here where they're kind of closed and then they open up and you've been down. I don't know that you get automatically right back, but good opportunity to kind of take a look at it. Is it fairly priced? We can go and look at the valuation of this one. It's a hold. What does Wall Street say? There are 26 analysts. 14 have a strong buy. Okay, $107, 18% upside. So maybe maybe this one looks good to you. Maybe Rivian looks good to you. Maybe you like overpriced electric vehicles. Because Rivian right now, the average price from Wall Street is $14. This one has just been in a downfall, ever since. You can see the 5-year chart on this one. I mean, does that look like a stock that, oh my God, I've got to get it? But it could pop. Could absolutely pop. It's just an expensive business to be in here. You can see gross profit minus 20. They are losing money on every card that they actually sell. So then you've got one, Energy Transfer tonight, which I actually like. This one has an 8% yield on its dividend going forward. Okay, Wall Street says that it's worth $22. It's trading at 16. That's 41% upside. When you analyze with AI and you look at it, Kinder Morgan, Enterprise, Plain America's Pipeline, or the competitors, ET's valuation presents a mixed picture. It's not overvalued. While the price to sales ratio is notably lower than the sector, suggesting a cheap stock, Its EBITDA is higher in the sector, indicating some overpricing. However, a dividend yield of 7.71% compared to the sector's 4.8% suggests great income potential. Profitability is strong, with ET boasting cash from operations 11.5. Positives is expected to report a robust quarter driven by recent dividend increases and ongoing expansion projects. The company projects 5% EBITDA. Energy concerns faces near-term unit price volatility due to fluctuating oil prices and economic uncertainties. The oil prices isn't going down. It's not a good thing for these producers. They make less money. But it's got no short interest. Nobody's shorting this thing. I like MPLX. Now, if we look at this one, where's MPLX? It's number 2. They just reported earnings in line. They're up 0.373%. This one has just been a phenomenal. We looked at 5 years of Rivian down there. Look at the 5 years of this one. If you want to look at ET has done about the same thing. Five years right there. So you've made 96%, plus you've gotten a 7 to 8% dividend. So it's a good one. It should be in the mix. Now, as far as the scans go, we can go and look at the scanner. Right here. I'll pull it up. Let's see, scanner. And I've got the daily stock pick scanner right there. And this is the scanner. This is the, I believe it's the S&P 500. I will put all the scans of all the lists that I did. If you want to watch it, you can just go to the live one on YouTube. But this is just the S&P 500 Dollar Tree right there. You've got an entry. ELV. This is Elevance Health at 416. Erie, you've got this one. This one's interesting. The Erie Indemnity Company, you win 44% of the time. You make 76% versus buy and hold at 66%. Your average win is 10%. You've got a gap going up here all the way to 406. Could be interesting. You got Fastenal with a secondary entry. The first one was at 80. This one's at about 82 today where it's trading. You've got Hershey's, HSY. Could this one be a winner? It's not, historically for the last 24 months, it hasn't won. Then you've got KDB, Kelly Dr. Pepper. This one makes you 4% over the last 2 years versus minus 3% if you buy and hold. Doesn't win that much, wins 30%. You got Kimberly-Clark. This one loses you 6% versus losing 9%. Not something I would look at. Kinder Morgan. You make 3% versus buying and holding makes you 53% over the last 24 months. You win 48% of the time. Average win is 3%. Probably not risk reward. Kroger is an incredible one. Okay. I would just buy this one and hold it. I mean, you can go and check out the valuation. Kroger, the chart on this one just looks insanely good. Look at that one. I mean, that's a good one. MGM. Then you've got Ross Stores, which has an entry right as it gets to its 200-day right there with its earnings coming up later in May. You've got WEA, Walgreen Boots, which has been a big winner this year. This one started the year at $9. You're at almost $11. That's a big winner. You went all the way up to freaking $13 after their last earnings. They've already had their earnings. You had an entry at 1091. You can get another entry. There's your scan of the S&P 500 for the 4-hour algorithm. There are other scans in there, including AMR. You got Snapchat, which could see another rebound. The Snapchat has been, if you look at this weekly one and you just look at this range, if I just put Snapchat in this range right here and I just go across there and say, okay, is it going to pop back up? Probably. I mean, the RSI is at 39. The MACD is just along the oscillator. You could probably buy this at 8 and sell it at 12. I mean, that might be a strategy that you pick, just like Snowflake, like I brought up. You got a couple of leveraged ETFs, short side. You got SARK, which is the short on the ARK funds, $50. You've got TSLS, which is the short side of Tesla, right at $9. So is Tesla weak? Tesla could be weak. If Tesla's weak, let's go to this one. We're going to look at core investments. So Tesla right here, if you go up to Tesla, it's down 2%. So TSLS may be the one to buy. Maybe this one's losing some steam. Again, there's so many opportunities out there to look at this stuff, to find this stuff. There's a bull market, like Jim Crane, there's a bull market everywhere. There is. And I think in this market, you want to pick your stocks like I went over in the beginning. I bought QQQ, I bought VOO, I bought Meta, I bought Crowd, I bought Wells Fargo. It's not comfortable when you buy them. It is not. I will guarantee you it is never comfortable for me when I buy it. But sometimes you just got to identify where your long-term goals are. These may be short-term positions where I just buy it and wait for a pullback again. Because I did take some tax loss harvesting. So I've got losses and I can take some gains against those losses and not pay taxes. Okay? Understand your tax situation. It's a big part of actually trading. So if you have any questions, you can hit me up. Again, remember the sales that are going on. You got Trendspider sale. You got Seeking Alpha, their summer sale. You can sign up for my newsletter, which is free. You can sign up for that one. The other thing that's over here that I've been using quite a bit lately for charts while I'm out on the road is Webull. I love that app. Go and get some free stocks. I threw $1,000 in there a couple of years ago. And let's see, let me just pull up Webull so I can show it to you. I think it was $1,000 a few years ago. And, I'm down today, but it's $10,681. So I bet on it. So I've got Apple, Google, iBit, Nvidia, Spotify, and Tesla. That's my entire portfolio. And so I'm down on Nvidia 4%. That's the only negative here. Apple, I'm up 16%. Google, I'm up 7%. iBit, I'm up 20%. Spotify, I'm up 50%. Tesla, I'm up 20%. So I trade in and out of a bunch of triple leverage ETFs, and I really use that as risky. But again, if you're looking for a great mobile platform, I like Webull. I also have Robinhood. I haven't learned to love Robinhood as much. I am looking to get into Robinhood as an investment. So if you have any questions, hit me up. I'll talk to you guys later. Say bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.